Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly the two big events of last week are actually following through into this week. Certainly the FOMC meeting that has been driving this dollar strength on last Wednesday has still got its legacy into this week. Certainly it looks as though that the Fed's getting more hawkish in its outlook as the dot plots that the Fed members gave consistently looks as though that the interest rates are going to be at higher levels through the end of next year and the year after. So the market took that as a fairly hawkish view, dollar strength, and certainly that has impacted on some of these forex pairs, but also commodity prices as well remain under pressure. The other key event of last week was the Scottish referendum independence vote. And the no campaign won in the end, but certainly the volatility in the markets and the uncertainty, which to be honest is now going to actually continue because of the political uncertainty of how they're going to deal with the potential for devolution in the UK and the impact that that will have on government spending and potential for impacts on the gilt market and also furthermore on sterling as well, and the equity markets are also being hit by that. So how does this leave the forex markets? Well, certainly the euro dollar remains under pressure. Consistent consolidation periods are being sold into, further pressure downside towards some key levels. There are some big supports coming up now on the downside. 127.86 is the 61.8 Fibonacci retracement level of the big bull run. But also you've got the key July 2013 low at $1.2750. Now the initial move today has been for a slight bounce on the upside, but certainly just in recent times any sort of selling, any sort of bounces have been used as a chance to sell again, so I'd expect that to probably be continuing to be the case. Now in terms of cable, there's more of a different outlook. The bulls are starting to gain a little bit of a foothold potentially in this market. Yes, it has been very volatile, but certainly there's some key levels. 160 is an initial reaction low that's been holding, and now 162.50 as well for the support. So there could be something going on here, but I think it's more of a watch this space on cable. In terms of the big run on dollar yen, wow, that move has strongly gone higher. Although it is starting to consolidate a little bit in the last day or so, we're still thinking that the longer term outlook towards 110.65 is going to be seen in due course, but you'd be looking to buy into any dips, and I think that if you were to see a move below the 108.48 mark, then I think that would complete a very small top pattern that would bring you back to 107.50, and I think around that sort of level you think you'd be looking at that as a very good buying opportunity. Now in terms of indices, well, the Wall Street markets remain very strong. The S&P 500 once again pushed to a new intraday high on Friday, but there are signs, certainly, I mean, if you look at the Russell 2000, there are people that are talking about a big death cross that's going on between the 50 and the 200-day moving averages. Not in specific technical terms is that the case, because the death cross should be happening when the two moving averages are falling. Well, the 50-day is falling below the 200-day moving average, which is still rising. So there is still an element of negativity about it, but not as much, I think, as what's being made out. Now, in terms of the DAX, the European markets continue to underperform quite badly, Russia being the case. Big drag on the DAX, and obviously the Scottish independence vote has had its drag on the FTSE 100, but certainly the DAX needs to hold above 9,600, and that is the key level. I think that is a bit of a watermark now for the DAX in terms of positive and negative. FTSE continues to underperform though, and certainly this reaction that we've had today, 50 points on the downside, it's a big move to the downside, and it's now taking it back to within touching distance of that key support around which had been in place for that head and shoulders top pattern last week, 6773, and if you see a close below 6773, I think we're going to see a move back towards an implied move back towards 6640. Okay, so with the gold price, as I said, commodities are under significant pressure, and the downside that we've seen in the gold price continues to move lower. Momentum indicators are very weak, and I think an implied initial target of 1200 is seen from the downside break from the trend channel, but also the 1184.50 mark from that key December low. So I think we're going to see further downside and again rallies being tested as and used as selling opportunities once again. So what events are we looking out for this week? Well, we've got a lot of housing data out for the States. That could well be the dollar driver of this week, starting with the existing home sales on Monday and the new home sales for the States on Wednesday. Now, in terms of other markets, you're certainly looking towards the flash PMIs for China and the Eurozone. Certainly the Eurozone ones are going to be important. Germany, for example, on the PMI has been falling since the beginning of the year, so we need to start to see Germany picking up if there is potential for any recovery in that market. And certainly then again the IFO Business Climate Index as well, that comes out on Wednesday, and we'll be looking for that to improve, but again that has been falling since March as well, so there's a couple of indicators there for Germany that are important this week. Again, for the States, we've got the durable goods data for I think Thursday, and then into Friday we've got the Japanese CPI. You've then got the final reading of US GDP and the final reading of US Michigan sentiment. So quite a bit to go on, but not top level data. This is second tier data that we're talking about this week. So maybe a bit more of a calming down of the markets in that regard. Anyway, I wish you good luck in your trading throughout this week, and I'll speak to you next week. Thank you.